I know what you're thinking. You are thinking that I'm just kidding because you have seen this pattern 5 minutes ago and I have introduced the pattern with another name, that is hammer. The hanging man has the same shape as the hammer, and actually the first 5 conditions are the same. It's only the last one that is different. In fact, the hanging man appears when the market is in an uptrend. Does it make a huge difference? Let's find out. Here we have euro-dollar on a 4-hour chart. I have highlighted in green all the candlesticks that have the same shape of a hanging man, but that do not respect the last condition. That means that they appear when there's not a clear uptrend. So we are not going to take them as hanging man. In yellow, you can see the candles that respect all the conditions, and so they need to be considered as hanging man. The best thing to do to verify the strength of this pattern is to analyze the price action before the pattern, the price action of the pattern, and then combine them and draw our conclusions. Let's analyze the price action before these 2 hanging men in yellow. In previous sessions, the price was going up, so there was a clear uptrend before that the hanging man appears. The hanging man, as a single candle, tells us the same information of the hammer. The session starts with sellers in control that push the price down. Then buyers appear and they manage to push the price up, closing the session near the opening price. So at the beginning of the session, sellers were in control. By the end of the session, buyers are in control. Combining the two analyses, we can say that buyers are in control on the market. Then with the hanging man, sellers attempt to change the trend, pushing the price down. But buyers react and then the price goes up again. So at the end of the session that defines the hanging man, the buyers are in control, not the sellers. This analysis for me is enough to let me say that I don't recommend to use the hanging man. I don't want to open short positions on a candlestick that is telling me that the buyers were stronger than the sellers by the end of the session. But why traders consider the hanging man a good reversal pattern? The first reason is that they see the hanging man as the first trace of sellers on the market. After all, the hanging man is saying that after many bullish sessions, the sellers finally made their move to push the price down, even if the buyers reacted very well by the end of the session. The second reason, and from my point of view, this is the most important one, is that many traders apply candlestick patterns the way they study them in the books, without really understanding the logic behind the pattern. Don't get me wrong, I don't want to say that I'm the only one who understands candlestick patterns. There are so many traders better than me out there, but when I was moderator for a Forex forum, I have seen many traders or aspiring traders reading the charts as if they were selling something on the street market. Hammer here, hanging man there, another hammer here, let's buy it, let's sell here on the hanging man. This is not the way I want you to trade. I want you to understand every single pattern in order that you will be able to analyze the market with your brain, even if you don't remember the name of the patterns. If we analyze the conditions needed to form the shooting star, we can see that this pattern is pretty much the opposite of the hammer. First of all, we have a small real body, just like the hammer. This time, the real body is at the bottom end of the session's range. We have a very small or no lower shadow, and a long upper shadow that should be at least twice the size of the height of the real body. Even for the shooting star, the color is not important. Now, last condition, as you might have guessed so far, is usually the most important one. The shooting star requires that the market is in an uptrend. So what does this candle say about the fight between buyers and sellers? The small lower shadow and the long upper shadow let us know that there hasn't been much action below the opening price, and the buyers started very soon to push the price up. By the end of the session, sellers step into the market and the price goes down, closing near the opening price. In a short and easy way, we can say that buyers were in control at the beginning, but sellers have been stronger by the end of the session. Here we have euro-dollar on a daily chart. I have highlighted in green all the candlesticks that have the same shape of a shooting star, but that I would not have considered because they don't satisfy last condition. That means that they don't appear during a clear uptrend. In yellow, you can see real shooting stars. They satisfy all the conditions. Then I have highlighted one in a kind of light purple because I'm not sure about that one. It appears after a move up, even if the price is still lower than the last high that has been formed by the first shooting star in yellow. I think that at that point I would have looked for other clues to understand if it was a good signal or not. So let's analyze the price action before the shooting stars are lighted in yellow, the price action of the shooting stars, and then we can combine them to draw our conclusions. Before the shooting star, buyers are completely in control. The price is clearly going up. Then a shooting star appears. At the beginning of the shooting star, buyers push the price higher. This is not a surprise. After all, the price was going up before the shooting star, so everyone is expecting that the price continues to go up. The surprise comes when sellers step into the market and push the price back near the opening of the session. So putting it all together, buyers have been too strong for sellers in last sessions, so you can see a lot of big green candles. At one point, a shooting star appears and is telling us that the sellers ended the session stronger than the buyers. This is probably because at that point, the price started to be convenient for sellers to open their short positions. I think that now you're starting to understand better how to analyze the patterns and the supply and demand game on the market, so you also understand why the color doesn't matter. The important thing is that sellers recovered from a very bad start of the session. So, as for the hammer, it is not about the color, but about the size. The longer the upper shadow, the shorter the lower shadow, the smaller the real body, the more meaningful the shooting star will be.